Hey guys, good evening everybody. Actually, good morning everybody. Hopefully everybody is having a great day off. Happy Martin Luther King Jr. Day. Hope everybody is having a great morning. I'm recording this in the morning so I can have the rest of the day to myself, my family, and hopefully get one more last day to kind of enjoy life, right? Kind of enjoy life until we get back to the grind. And speaking of the grind, I always tell this to traders, especially when you're a new trader. When you're a new trader, you're so far behind. Think about this. You have so many disadvantages that most of the disadvantages you can't even identify. So I use, like, for example, today as a perfect example. The market is closed today, right? The market is closed. So just because you're not working today doesn't mean you shouldn't put in the work. Okay, this is a very relentless and unforgiving business. Every single day I look just because of the fact I'm creating an actual watch list every single day, actionable trading list every single day. But especially on the weekends, I go through a lot of charts. I mean, a lot of charts and different indexes, different benchmarks. And I'm trying to look for things that are kind of just jumping out the page. Now, most of the time, it won't happen. You can't recreate the wheel. I mean, I've been doing this since I'm 25 years old. I'm 42 right now, so it's very tough to find something new every single time you start backtesting. But for all you new traders, you have to look at charts. Got to look at a lot of charts. And again, not for setups. You're not looking for charts for setups. You're looking for charts. You're trying to go back 6 months, 3 months, 6 months, 9 months to see where the value of the stock was, whether it's going from bottom to top to bottom. It's always very important to try to understand why a stock and how a stock got to current levels than where it's actually going. If you could identify, mini arbitragers, and that's what everything is. That was the whole backbone and the foundation behind the whole PS60 theory. Is my arbitrage is stocks go from supply to supply, and the more, obviously, the more channels that I can identify, the easier it will be for me to identify where stocks could potentially stop. So if you're a new trader, start looking for different arbitrages. Start looking for different edges. Again, majority of the traders that are not making a living, okay, I hate using the word making money. The traders that are not making a living, they're not putting in the work because they're always looking at the same thing everybody else is looking at. And unfortunately, if you're waking up in the morning and the first thing that you're doing is putting on the pre-market high list, well, you're doing the same thing that every single trader is doing, and 90% of them don't make money. So if 90% of them don't make a living, right, don't make a living doing this, well, why would you want to pattern yourself and try to do exactly the same thing with those trades? It makes perfect sense. Just really think about this. So just because the market is not open, guys, I really invite you guys to really make a commitment, put in the work, look at an hour and a half of charts, where stocks came from, why they stopped, why they continued. Because remember this, it's a very simple notation. If you're not putting in the work, know that the person on the other side of the trade is, okay? And the last thing you want to do is be in a disadvantage going into a trade, because again, we don't get any mulligans. They will take your money, and they'll take your money with a very big smile on their face. So definitely put in the work. Another thing, we started talking about in the room, and again, you see all these different updates, and well, the market was, the market did nothing last week. I mean, as far as technically did, Dow lost 0.5%, S&P 500 down a 0.1%, Nasdaq did rise 1%. We'll talk about that in a second. But anybody can give you an update what the market did. We talk about it, and we kind of address things from the trader's point of view. And one of the biggest things, in my opinion, especially for a new trader, is that security blanket, right? It's the security blanket, and security blanket means, well, if the trader that I'm looking up to, okay, or at least taking some sort of guidance, some sort of, I don't want to use the word mentor, but some sort of guidance, some sort of advice from, if that person's not in the trade, well, I don't want to be in the trade as well, okay? Here's the problem, Many traders don't understand a very simplistic concept of the stock market. The stock market has been around for a long time, right? Even going back to like the 19, forget about 27. Let's go back to the 87 crash, right? Let's go back to the 87 crash. 87, right? In 1987, I was 13 years old, right? I was 13 years old, okay? So realistically, 13 years old, you have an idea of what's going on, but you really don't have an idea of what's going on. So the first time I heard well, the stock market crashed, I really didn't think a lot of it. As I got older and as I started getting involved with the stock market myself, it started to make sense. And the reason why I bring this up is if you think about the action, again, I'm just going back to 1987. Obviously, we can go back to 1918, you can go back to 27, all that stuff in between. But I'm just going back to 87. Stocks will trade, okay, guys? Stocks will trade whether you're in the market, whether you're not in the market, whether you know what a stock is, whether you know the difference between a stock market and a supermarket. Stocks will do what they have to do. So, for example, if IBM, right, if you don't know what IBM is, okay, IBM, for example, okay, tomorrow will go either up or it's going to go down. Okay, it's very, very rare that it's going to stay the same. So my point is, guys, you don't need anybody to hold your hand to be in the stock with you. Okay, it makes no difference. Okay, the security blanket of saying, well, Dan's not in the trade, I'm not going to take the trade. If Dan went to lunch, well, I know we spoke about the setup for the last 2 hours, but if Dan went to lunch and it triggered without him, well, I can't get into the trade because he's not here. And the one thing that we always do, and this is kind of generally in life, majority of human beings like to always make excuses. It's too cold outside, right? Too hot outside. I'm not smart enough. I'm not tall enough. I don't have enough education. I don't have enough money. Okay, it's for somebody else. It's not for me. It's all excuses. Stocks are the same thing. People will always think, and this is why a lot of traders have the theory of overthinking, way too much. And you're sitting there and you're looking at a trade. It's a perfect setup. And you give yourself 25 different reasons not to do the trade. And obviously the stock works out because it's a premium setup. And the next thing you're saying is, I effing knew it, right? I effing knew it. But you took yourself 12 different, 20 different excuses not to put on the trade. And that's what the stock market is. The stock market is there to make you feel compromised. The stock market is there to make you feel that you are, literally running uphill. The stock market is there strictly to take away your money. And you know all this. All this is already built up psychologically in your brain. And many new traders, again, these are new traders. These are not, these are not traders who've been trading for at least a decade. Many new traders will use all those excuses and they will literally pass up. They will literally pass up an 8+ setup because they can't be in it with somebody else holding their hand, reassuring them that it'll be all right. Guys, setups are setups. Arbitrages are arbitrage. There's a reason why process is your only friend, okay? If you're chasing the stock up 150%, you don't need anybody to be in the trade with you, okay? You are in a very, very losing, and you're in a position of weakness. When you find an arbitrage and you find that A+ setup and you're looking for confirmation, that's all you need, because that stock will do whatever it needs to do, whether whether you're in the trade or you're not in the trade. That's a completely different story. So for new traders, kind of the tip of the day is trust the process. Okay, guys, trust the process. I don't care what your process is, whether it's shorting stocks up 3 days in a row on a blow off top, whether it's buying stocks down 10 days in a row into support, whether it's buying breakouts, whether it's shorting breakdowns, whether it's doing OPG trading, whether it's doing option trading, whatever your edge is. And that's what trading is. Whatever your edge is, click the damn mouse, because the process will vindicate everything that you put into the hard work. It's going to vindicate everything that you spent countless time researching, back testing. Again, there's no greater feeling. I say this all the time, guys. There's no greater feeling than being in control of your trading. So moral of the story is, guys, a setup is a setup, A+. You don't need anybody to be in there with you. Nobody's smarter than the market. Nobody's smarter than you. Once you see something working, it works, guys. It's not an accident. It usually does work. So trust yourself, reach for the stars, and don't be lazy. Just don't be lazy, and everything will follow through. So let's talk about the market. First couple of weeks of the tape, pretty solid, okay, pretty solid. This week against benchmarks, really didn't do anything. The Dow was basically flat, a little bit lower. S&P 500 relatively flat, and NASDAQ was up about 1%. And again, NASDAQ was up 1% because speculation money came in, right? If you look at what happened this week with stocks, like for example, like Amazon, very, very big run. You look at a stock, for example, like Facebook, right? Good runs. I mean, really, really good runs in these names. You talk about Tesla, and when you see speculation money, and this is kind of what we were lacking in the last month or so of 2016, the money flow is coming back into high beta. And again, you don't need to, and I say this all the time, you don't need to trade high beta to really appreciate what it represents. And what it represents is people, retail, institution wanting to own Tesla, wanting to own Apple, wanting to own Amazon, wanting to own Netflix. And that represents a bullish scenario. And that's exactly what we had here. So if you look at the last 2 weeks of the year, very slow, very methodical, very drawn out, compared to the first 2 weeks of the year, very aggressive, right? Very aggressive. Again, you know, the high beta names will take their days off, okay? And we see that, you know, from time to time. But, you know, ultimately, very good action. The small caps are moving. The big caps are moving. The beta names are moving, which is very, very good because, again, I did accomplish already a couple things in the beginning, just the beginning, first couple of weeks of this year that I set out to. Number one, I said I'm going to trade much more small cap stocks, which I did. And the second thing is I said to keep a book. You know, I said to keep a book and to make sure I get multiple day runners on these things. So far, so good. I definitely accomplished both. So going into this week, you know, again, the Trump rally kind of stalled. Did anybody really believe for a second that we're going to go straight up, right? Again, there's a lot of theory. There's a lot of theory that's going out. Well, as soon as we hit Dow 20,000, we're going to sell off. Maybe, maybe not. We don't know. There's another theory going around. Well, as soon as Trump steps on the White House lawn, the market's going to sell off. Maybe, maybe not. But the one thing that we'll tell you is the market has had every opportunity, every opportunity to completely sell off. Had every opportunity to completely sell off, especially in the last several days, right? When we basically breached temporarily the 20-day moving average and we snapped right back. So, you know, knee-jerk reaction is a short-term fix. It's a Band-Aid. You know, we're talking about now from November all the way to the middle of January. This is, you know, taking on more of an actual bullish scenario than a knee-jerk reaction. So if you're for Trump, if you're against Trump, whatever the case may be, he is our, you know, our president for the next 4 years. We have to support, give him the benefit of the doubt, and make sure, again, you know, the market kind of dictates to us which way the wind is blowing, not anybody that's in office. Because again, the last time I checked, there's been no president, for the exception of Bill Clinton, who's obviously changed a lot of lives during the internet craze. But for the exception of Bill Clinton being in office, I can't really think of too many presidents that affected my life. Okay, so that's the thing. As long as you have process, you will be good to go. Pretty decent day on Friday. The one trade I wish I could have back. Okay, the one trade I wish I had back was Tesla. Okay, so here let's kind of backtrack, right? So Amazon has gone on this big run, right? Amazon's gone on this big run in the last, I would say in the last 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's just call it 2 weeks. Okay, so in the last 2 weeks, Amazon has gone on a big run, right? Has gone from 747 to 820. Okay, 820. And the whole theory behind it is, well, how come Google doesn't follow, right? Doesn't Google need to follow? I mean, everybody knows Amazon's eating all the retailers' lunch. But again, just from the correlation point of view, and I've traded these things now a long time, don't they have to follow, right? So I was watching Google, right? And this is kind of getting this into Friday's recap. So I was watching Google and I said to myself, self, okay, this thing is going to go. Here's the flag. It's just been flagging there. If Amazon takes off, I'm going to buy Google, and I want to buy Google above. I want to buy Google. Their opening range highs, because I do believe Google has the potential to go up, you know, $10, $15, $20, because again, it's due. So here's what I did, right? Here's what I did. So let's put this into Google instead of Amazon. Okay. So here is the same chart. Okay. Here is exactly the same chart. And I want to show you guys something. Okay. Let me make this a little bigger. And this is the trade I wish I could get back, because this was a completely difference in you know, really difference in P&L. So here's the trade. So here's the setup in your trade. So you have your top of the channel right here on Tesla, which is 230.70, and this is what we discussed at morning strategy. So if it, you know, we talked about if it takes out the 231, it should be good. And at the same time, we were looking at this area right here, right? The same thing, we're looking at this area right here on Google, and I said to myself, well, Google is due. Google is due. Google is going to follow Amazon. Google is going to follow Amazon. So guess what? Obviously, I don't take Tesla. Tesla goes up $70. I end up taking Google. Google goes up like $1 and change. It sits there for like literally like 15 minutes, does absolutely nothing, and I wound up making 20 cents in the trade. Same, right? Same chart, same setup, both of them confirming supply in the 60-minute channel. And unfortunately, sometimes the bull bounces this way. Same chart, and I really thought Google was going to be the play. I thought Google was going to 840, and unfortunately, it just didn't do so. And this is sometimes, a lot of new traders really take it personally, and they say to themselves, "Oh my God, I can't believe it. I have no luck." You know what, guys? This is just sometimes the way the ball bounces. Sometimes you will catch the right one. They'll have sometimes the exact same setup, and unfortunately, you won't get the same results. So unfortunately, making 20 cents on Google wasn't exactly what I was looking for. But the funny thing is, it actually sold off like $2 after I sold it. So I made the right read. Unfortunately, I just didn't get the same results as if I would have taken Tesla. Speaking of Amazon, congratulations to all you guys who did, who really did very well in the Amazon trade. Amazon was a sneaky pivot. I even tweeted this out on Thursday. Amazon was a sneaky pivot right here, this 805 area. And once it broke 805, it really took off. My party did very well, and almost 15 points on this thing. Very good trade. Congratulations to all you guys who did ride up as well. I know some of you guys had options, some of you guys had equity. Congratulations. I mean, really nice move. 805 to 820. Gorgeous move. I mean, really nice move there. As well. AKAO, congratulations to all you guys who caught AKAO. And here's a sneaky pivot right here. Again, guys, for you guys at home that, again, are interested about the PS60 theory, yeah, I mean, that's the whole point. It's stocks taking out supply, confirmed, right? So you can see this line right here. This linear regression line made it stop at 1734, and we talked about it in the room, and Patterson gave the room the heads up. He said, hey, you know what? 1734 is the sneaky pivot. And 1750 is confirmation. A nice move. I mean, let's even say from 1750 all the way up to 1826. Nice move there as well. A couple of small cap trades I traded on Friday. ENPH, okay, ENPH. I bought it right here. This, right here. 149, 150, 149, 150, and again. How do you know where to sell? Well, you sell into supply, and I sold it literally within 2 cents of supply. Sold it within 2 cents of supply at 167. So nice move there. Nice move there as well. And this is the trade that had a lot of potential. I was very disappointed at it. Okay, this is the trade that had a lot of potential. So we've been coveting this CNAT for a while, and my whole theory was nice tight wedge. They can't sell it off. The sellers are very comfortable at these levels because, well, it's obvious they can't sell it off. And we were watching this whole level here. We had it off the watch list, 515, 520, 515, 520, 515, 520. So Friday, it finally breaks 515, right? Finally breaks 515. So I buy the stock at 590, okay? And look how it's set up perfectly, how it correlates on the 60-minute, right? So it gets above this 515 level, okay? And unfortunately, this is where the trade had so much potential. I didn't want to make any sales around that 530 area because I thought if it broke that 533 level, it has potential to get to this 555. That's where I want to make some initial sales. Unfortunately, this is technical analysis is so damn specific. Look at Friday's high, right? 533, right? It never took out the 533 high. I sold half of my position there at 532 and 528. And unfortunately, my other half, I lost. So I made about 12, 13 cents on half, and I wound up losing, I think about 5, 6 cents on the other. So a very marginalized trade. But I'm still watching this thing for next week. Sometimes, you get a good volume surge. They're building, and then you get hit with a roadblock. That roadblock is technical analysis, guys. So I really encourage every new trader, get your technical analysis game down strictly, man. Again, you don't need anybody else. Once you have technical analysis and you have a very good process behind it, you're going to be very well. So again, stocks just don't stop randomly. And this is what we talked about after the trade was based on the 520s. Guys, we need 533 break. We need the 533 break. We need the 533 break. And lo and behold, there was a big sell there, reloading at 533. So we knew we had to kind of get out of Dodge. So ultimately pretty decent day. Nothing crazy. nothing outrageous. Again, every single day is not supposed to be this historical event. You're grinding, right? You're grinding. You're trying to get on base. You're trying to manufacture runs, get on base, walk, hit batsmen, on an error, infield single, solid line. Get on base, manufacture runs, the home runs, the doubles, the triples, the home runs. They will come organically. Just look to get on base and grind it out, guys. That's the true nature, and that's the true effect of potential longevity in this business. Just do what you have to do to continue your shelf life. Have no expectations. Use common sense, and the most important part is, again, as I say this all the time, lead with your shield, not with your chin. So let's get into the action for tomorrow. Okay, let's talk about some of the plays I kind of like for tomorrow. I'm gonna go through all of them because there's a couple of smaller cap names. I don't want artificial, I don't want to, as you guys can understand, I don't want artificial volume. I want to see these things kind of play out. Yeah, you know what? I want to start out with CNET. I think CNET, honestly, if this thing can just confirm, okay, guys, we have this definitive pivot now in the daily chart. If this thing can just confirm, guys, send alert, okay, send alert on CNET, 534, 535. If this thing can finally, clear out that seller who was selling 533, this thing has a shot. This thing has a shot to go back to that $6 area, so keep an eye on that. SGMO, okay, SGMO looks good. SGMO looks good. Small biotech name, okay, small biotech name. It's had a pretty good run in the last couple of weeks. It's stopped now here, as you can see by this yellow line, which is the 150-day moving average. And again, a lot of people don't use the 150-day moving average. I only got introduced to it about a year ago. And again, this is why things don't randomly stop. Years ago, I would have said, wow, I don't understand why it stopped. It has room to the 200-day. And this is why. So, as much data as possible, definitely get into, definitely get into these points of interest. So keep an eye on SGMO. I think a break above Friday's high, 445, could potentially push this thing back to the 200-day moving average of $5. Keep an eye on that. Herbalife. Okay, Herbalife. I think it's a very, very good risk reward trade on Herbalife. Again, if you guys remember, for all you guys who've seen my videos, especially in the last week, all the value comes from the bottom. It never comes from the top. So there was a couple of swings that we put into the channel earlier this week, and this is the same charts. I mean, this is exactly the same charts. Look at Cerner, guys. Take a mental snapshot of Cerner, right? It stopped at supply, okay? Stopped at supply, and once it broke above that 50, 60 level, just grinding higher. It's already $1 higher. Same thing was with GWPH. Okay, same thing was with GWPH. Same chart. I mean, it's same exact chart. So if you look at HLF, it's another stock coming off the bottom. Tons of shorts, right? Toxic. I mean, toxic company. Bill Ackman with Valiant and Herbalife and Chipotle, complete toxic. Just all toxic. But again, as we say all the time, the worst companies in the world have bullish tendencies. This is a very, very good risk reward. Today's Friday's high was 52.20. It closed at 52. You're risking literally 20 cents for a potential move back to $55. Very, very good risk reward on Herbalife. Sohu looks good. Sohu looks good. Chinese portal, they all trade together. Sina, Sohu, Baidu, NTs, good looking chart. It's flagging nicely, big expanding volume Friday, biggest volume in the last 2 weeks. So a break above 39.50. Again, the stock closed at 39.40. You're buying it through 39.50. I mean, what's your risk? This is a riskless trade. So definitely keep an eye on Sohu, potentially get to the 200-day moving average. Let's see what else I want to talk about. ENPH, again, I want to go back into this trade. I want to go back into the trade through Friday high of that 169 area. So 169 will probably get it back to $2. And guys, keep an eye on this little stock, AT&M, another little biotech coming off the bottom. Okay, another biotech coming off the bottom. Look at the expanding volume. I say this all the time, volume usually precedes price. And if this can confirm, you have a potential 25-30% move of upside bias here. Again, these small cap stocks have been going, just really, really aggressive. The larger cap names like Google, like Tesla, like Amazon, we'll discuss it. We'll discuss it at Morning Strategy that starts off at 9 a.m. Eastern time tomorrow morning, because again, when you look at the 60-minute channels, all these studies, they kind of change. So it's very, very tough for me to give you a definitive price without knowing where the top and the bottom of the channel is, because these things are expanding and contracting all the time. So guys, enjoy your MLK day off, but put in the work, guys. Put in the work. And I'm telling you, if you want to do this for a living, just know if you're not putting in the work, somebody else is. Guys, God bless. I will see you all, God's help, tomorrow.